Hello, everybody. So, as a financial advisor, one of the biggest topics that comes up in retirement planning, in fact, you might say it's the mother of all topics for retirement planning, is the subject of Social Security. So, a lot of people don't realize that Social Security is taxable to you, or at least it's potentially taxable to you. I will first say I'm not a tax advisor, I'm a certified financial planner. So, if you have any more detailed questions about taxes, please consult with your tax advisor. I should say that. So I'm not saying it's fair. I mean, you did pay into Social Security throughout your working career, but it is potentially taxable to you in some way. And so I want to discuss some of the income levels and who pays tax on Social Security, et cetera. So one of the subjects we really need to cover is it's a term called combined income. Okay, so I'll give you the formula here. So combined income, that is your adjusted gross income, your AGI, plus non-taxable interest. So things like municipal bond, tax-free municipal bonds that generate tax-free income, that is non-taxable interest, plus one half of your Social Security benefit. So for example, if I had a job that I'm earning $10,000 in retirement, and let's say I don't have any non-taxable income, and then my Social Security benefit's $24,000. Well, $10,000 for my job, no tax-free interest, plus one half of my Social Security benefit, which is $12,000. So my combined income would be $22,000 in just that simple example. Okay, so that's combined income. Okay, so how is it taxable to you? So for our single filers, if you're a single person and you file single on your taxes, 50% of your benefits will be taxable to you if your combined income is between $25,000 and $34,000. So if it's under $25,000, you don't pay any tax on Social Security. Okay, if it's and also if your combined income is over $34,000, well, it is 85% taxable to you. So 85% of your Social Security benefits would be taxable to you. Okay, so for our friends who are married, couples who file jointly, married filing jointly, 50% of your benefits are taxable if your combined income is between $32,000 and $44,000. Okay, so if it's under $32,000, your combined income, you don't pay any tax on Social Security, and it's 85% taxable if your combined income is over $44,000. So it is what it is. If you're over $44,000, 85% of your Social Security benefits will be taxable to you as ordinary income. Okay, so what can you do about it? How can you control this? Some people really can't control it a great deal, but here's just some tips to maybe time it a little bit differently, control your income in retirement. So strategically time your retirement account withdrawals, like from a 401k, an IRA. You could delay your IRA distributions until a little bit later in retirement, and so your Social Security is not taxable as much or not taxable as all, maybe early in retirement. You could do Roth conversions, maybe early in retirement or even while you're still working, and then you're converting your regular IRA to a Roth IRA. So later in life, that comes out tax-free, and Roth distributions are not part of that combined income formula. That's tax-free income. So those are things that you could kind of time your retirement account withdrawals at some point. Also, what you could do is you can manage your investment income. Okay, so if I had a capital gain, let's say I sold a stock in a taxable account, not an IRA. Let's say I sold a stock at a profit, I would have to pay a capital gain tax on that. But if I also had some losses, maybe in another stock or a mutual fund or ETF or whatnot, and I sold that at a loss, I could use that loss to offset my capital gains to keep my income low. Another thing is if you had, perhaps dividend paying stocks or investments in a taxable brokerage account, and I really don't need the income, you might want to consider investing in some type of security that does not throw off a lot of dividend income, because that is taxable to you. Okay, and so another thing you can do is consider your part-time work very carefully. If I am going to take on a job in retirement, let's say I retire, I'm bored, I want something to do. Well, what if that part-time work is causing your Social Security benefits to be taxable to you? And so you could offset that completely, the fact that you're earning money, or you might end up with more dollars in your pocket at the end of the day. I mean, you just have to be the judge of that yourself, I guess. Coordinate with spousal income. So if you and your spouse are both receiving Social Security benefits, you might want to consider your retirement account distributions. Maybe wait till later to take your retirement account distributions. So at least for a while, we can keep our income fairly low because all we have is our Social Security benefit, and we don't pay as much tax, at least early on in retirement. Charitable giving. So, everything you donate to a charity, if you're itemizing deductions, could basically be a bigger deduction, which could come off of your AGI, your adjusted gross income. So if I itemize deductions and I'm making big charitable donations, that could potentially lower my taxable income, which could reduce my combined income in retirement. That's possible. Another thing, if I'm over 70 and a half, I could do what's called a qualified charitable distribution. I've talked about this in some other videos, where you can, if you're over 70 and a half, I'm allowed to take up to $100,000 per year of my IRA, and I can give it away to a charity, and it is not taxable to me. Okay? So if you're going to be making charitable donations, and maybe you can't itemize your deductions, and you're over 70 and a half, you might want to consider giving it from your IRA. That might help you out tax-wise. Also, just delaying Social Security benefits in general. Wait until full retirement or maybe beyond. If you delay your Social Security benefits until your retirement age, which is 66 and so many months for some people, is 67 for a lot of people, depending on your age. Delaying it might cause it to be less taxable to you, because you have some years where you just don't have a lot of income. And then also you can actually delay it until age 70. And so maybe it's taxed at a lower rate in the future because you don't have some other sources of income like a job. Maybe if you're working, in your 60s or whatever, maybe delay your Social Security benefits so you can keep your income lower. And so when you finally do collect Social Security, maybe it's not taxable as much or at all. It just depends. So anyway, these are just a couple tips to talking about Social Security. The main point is Social Security can be taxable to you, and it depends on what your income is. If you have any questions about this, or please talk to your financial advisor, or you can contact me directly. My contact's in the About section of my YouTube channel. And thanks for watching my video.